Good morning and thanks so much for tuning in. You're watching BQ Prime. This is Straight Talk. My name is Alex Matthew and with me is Hiral Dadia. Hiral, morning.
Good morning, Alex.
Hiral, when you're participating in a sprint, sometimes what happens when you reach the end of that race, you feel a little tired, right? That seems to be the case right now with the markets as well.
Absolutely. Probably there is some bit of fatigue that is coming in as well. But clearly, overall, if you see the trend that we've been witnessing, Alex, in terms of markets opening gap up, that has been broken in yesterday's session, right? So there is that cautiousness that's prevailing amongst investors because the thought that they have is how much more can we run from here? So that's the reason why we're seeing that fatigue that you're mentioning about. And we've seen consolidation in that 19,360 to around 19,400 kind of a zone overall in terms of markets.
So very narrow band, I think, yesterday in trade as well. Today, the cues aren't the best from overseas. US markets traded after a holiday and they ended with cuts of about 1/3% or so. And the Asian markets as well, trading with pretty sharp cuts because you see quite a few markets that are trading with cuts of over 1%.
Right.
And the gift Nifty suggesting a lower start.
I mean, it's a 35 to 40 point kind of a cut that we are seeing below that 19,500 mark in terms of gift Nifty. But what's interesting to see in terms of yesterday's session, Alex, was that it's the Nifty, FMCG and the auto. These two were the sectors that were actually leading the gains in yesterday's session. A lot of milestones that we achieved as well. And now the near-term outlook is that, yes, there will be consolidation in the markets, but the bias will continue to remain positive in spite of the consolidation. Apart from that, if you see, markets are in that overbought zone, and that's because of the recent upsurge that we've seen. And hence, selective profit taking could be on the cards as well. If you see on the technical and the FNO side as well, if in terms of the July futures, you've seen the highest put OI at around 19,300. And if you see in terms of the call side, 19,500 is the highest OI as well. The PCR has gone down to 1.36 from a 1.46, and the future open interest is indicating a buildup of fresh long positions in index futures for a third consecutive session. So clearly, you have both the call as well as the put writers who are fighting it out at that 19,400 strike currently, and that's leading, to a battle at the end. And that's a level that we should be watching out for. So clearly, watch out for these levels in terms of Nifty. But if you see in terms of Bank Nifty, heavy call writing at around 45,200 strike, whereas support is coming in at that 45,000 level. So initially, 44,000 was acting as a crucial support level over the last couple of sessions where we were seeing Bank Nifty consolidate. Now that's moved higher to around 44,000. So overall, yes, there is bullishness. How far it can sustain is what we need to see. Few stocks where we saw the highest 5-day increase in OI was Eicher Motors, Power Grid, as well as IOC. And if you talk about the non-Nifty names, Alex, LIC Housing Finance, HPCL, and Bandhan Bank, these are the ones which actually saw a good open interest build-up. Whereas on the decrease, on the lower end, you had a HDFC, which did see shedding, Wipro saw shedding, and a Coal India. HDFC, AMC, Petronet, and IDFC First. These were a few of the names which did see shedding in terms of the open interest as well. So we will continue to watch out for these counters as well from a derivative perspective today.
So I started by talking about fatigue, and that's not really the best way to start the morning. We have, of course, seen a very effervescent market in the recent past, and let's hope that that continues. But you certainly are tired of hearing about HDFC, aren't you?
Absolutely. More than HDFC, the number of analysts that I've spoken to by now, Alex, it's a variety, and it's different views coming in as well at some point in time.
But we are, as a collective, saying goodbye to HDFC, and the markets are as well. Himansh is joining in to talk about what that entails. Himansh, morning.
Good morning.
What do you have for us?
So, like you said, starting July onwards, the Bombay Stock Exchange and the National Stock Exchange will bid farewell to the HDFC stock. The stock is getting delisted following a massive 3.2 lakh crore reverse merger with its subsidiary, HDFC Bank. Effective from July 13th, HDFC stock won't be available for trading on the stock exchanges anymore. Both BSE and NSE have made that clear in separate notice that the trading will be suspended after the closing hours on July 12th. July 13th is the record date you need to remember. That's when the eligibility of shareholders who will receive HDFC Bank shares will be determined. For every 25 shares you currently hold in HDFC, you will receive 42 HDFC Bank shares. Now, talking about the F&O contracts, all existing contracts expiring on or after July 12th will be settled physically, resulting in coming on to the stock performance, HDFC shares closed 3% lower as of yesterday. Overall, exciting times lie ahead as this merger catapults HDFC into the ranks of, for HDFC Bank in the ranks of the world's fourth most valued lender, and the community has a lot to watch out for as this merger shapes up.
Thanks, Himansh. And clearly, we were already talking about after this step, you'll have LTI Mindtree that will be replacing HDFC in terms of Nifty 50. But what happens in terms of the Sensex? What is, the notification? Who is replacing HDFC on the Sensex, and what would it actually mean?
Right. So, following suit from the NSE, BSE Sensex has also announced the replacements for HDFC. Now we see the S&P BSE Index 30 follow suit with JSW Steel set to replace HDFC. Additionally, among other stocks, we'll also be seeing Zomato and JBM Auto replacing the mortgage lender in the BSE 100 and BSE 500 respectively. On Wednesday, shares of JSW Steel fell by 0.5% to roughly 792 apiece. And lastly, we may see the announcement factor in the price action today. Investors and funds tracking the index should keep an eye out on how these announcements factor in and how they shape up in the coming future.
All right. Thanks so much, Himansh, for that update. We've generally seen, at least for the major indices, stocks that come in, you see a little bit of buying that comes in, and so that there is that pop. A lot of times there is anticipation of an inclusion, and so that pop happens before that inclusion.
And in fact, Zomato is going to be interesting to watch out for as well, because that's going to be having some entry as well in one of the indices. So let's see how Zomato pans out in trade as well.
Absolutely. One of the question marks that we've had over the past few weeks, as we've talked about the merger and the imminent trading of the merged HDFC Bank on the stock exchanges, is what happens to the major indices, and particularly we're talking about the Nifty 50 and the weightage of these entities on the Nifty 50. Sajid has done a lot of analysis of this. In fact, we were sitting yesterday and talking about the fact that the merged entity becomes the largest weighted stock on the Nifty 50.
That's right. HDFC Bank will be the largest stock with the largest weight on the Nifty 50. It's going to go up to nearly 13% in the Nifty 50 index, making it the most weighted stock. And followed by Reliance, which will be around 10.3%. Now, Reliance so far has the highest weight in the Nifty index. It's now going to it will be the second largest stock in terms of weights, followed by ICICI Bank. Then you have Infosys and ITC. So to name the top five there. Now, if you look at how it stacks up, is that between the five banks and financials, which is ICICI Bank, you have the Nifty, you have HDFC Bank, Kotak Mahindra, Axis, and Bajaj Finance and State Bank of India. Together, they will have more than 1/3 of the entire weights, or more than 33% of the weights in Nifty 50. So it's going to be heavily stacked in favor of financials going forward. Not only that, top two, HDFC Bank and ICICI Bank, will have together a weight of nearly 21%. So any impact on banks, especially private sector banks, will have a major impact on Nifty 50 going forward. So that's something to watch out for, because we have seen a good banking rally happening in the last 3 to 4 quarters, and now if there is going to be some kind of pause or something, we're going to see some adjustment to the top private sector banks, and if that happens, you're going to see Nifty getting impacted, because both ICICI and HDFC Bank will have 21% or 1/5 of the weightage of.
And with this as well, Sajid, the other aspect is where majority of the analysts that we've spoken to are expecting a re-rating on HDFC Bank over the next 1 year, right?
Yeah.
So that positive impact probably will also be seen in terms of how the rally in terms of Nifty also pans
And
out.
while
So there is two things which is coming up. If you look at HDFC Bank, one, yes, you said the merger will bring in some synergies and the growth which is going to come in. The second being that there is a foreign holding gap which is
Headroom,
headroom
yes.
which is opening up to 18%. Now HDFC Bank can raise that money through primary issuances, or it can open it up for FIs to come and pick it up. But in either case, those are the two things which are weighing in favor of HDFC to maintain that kind of weightage going forward. But again, it's all depends upon how other stocks also perform.
Right. And with this, it's interesting to see how the weightage in terms of HDFC and ICICI put together as well, or only HDFC Bank will be higher than RIL, but still the market cap in terms of RIL will still continue to
True,
lead,
it's
right?
a free float factor, right?
Yeah.
So both Sensex and Nifty are free float index. In terms of free float, HDFC Bank will have a higher free float market cap as compared to RIL, and that's the reason why the weightage for RIL is lower than HDFC Bank. We don't going to see any dilution in that for RIL,
yes.
but if going forward they're going to raise further funds through primary issuances, that free float will market cap will further go up and increase the weightage. So that's something which is there. Also remember that MSCI is starting off with 74% free float factor, but going forward it may go up to 100%. So you're going to see a much better foreign fund flow going to come in. Maybe not now, maybe by the end of the year, once this entire thing stabilizes.
But at the same time, I'm traditionally what we've done when we're speaking about the markets, particularly the benchmark, when you say Reliance Industries moves 1.5% in a trading session and moves the benchmark quite significantly, we'll be talking about Reliance Industries and HDFC Bank very soon.
Yeah, and I think now the impact of HDFC Bank will be much higher than Reliance. But another important factor on Reliance, Ajit, is the Bank of America Merrill Lynch report that has come in today, which is clearly highlighting some bit of, somber moves in terms of the first quarter. What are the key takeaways and how do you see it impacting?
So, the first quarter has been very slow for Reliance, to put it in perspective. If you look at O2C, what Bank of America Merrill Lynch, Bank of America is saying with respect to Reliance is that they're going to see EBIT to come down by 6% quarter on quarter, and that's primarily because of the weaker gross refining margins, and this may be offset a little by the cheap Russian crude they're getting. So they're not able to get the gains from the Russian crude as such because of the weaker gross refining margins there. Petchem EBIT is expected to be flattish quarter on quarter, and that's primarily because you have too much of supply coming in and demand very limited. So the growth is not going to come in there as per Bank of America report. And Geo, again, while it will add around 7 million customers in quarter one compared to 6.4 in Q4 of last financial year, the ARPUs are going to be flattish there. And retail, again, while it will be led by grocery and fashion, the margins are expected to be, in the range of 7.1% EBITDA margin and EBIT margin of 5.4%. So again, flattish margins coming in there. So it's going to be muted quarter. Is not going to be a blockbuster one in terms of higher growth coming on the top line and EBITDA level for Reliance. Again, Reliance also has an event coming up with respect to his AGM, and most of the big announcements happen in the AGM. So while we don't know the date yet, it may be, that would be the big trigger for Reliance going
And
forward.
August, will be the month in terms of the AGM as well, right?
Yeah, and it has been a spectacle in the recent past. Saji, thank you so much for joining in for that perspective. We've been speaking about automotive quite a bit in the recent past, and if you looked at a particular stock yesterday, you will have noticed that it changed the number of figures that it trades in, and we're talking about Maruti Suzuki. It crossed that 10,000 mark. There's a lot happening for this counter.
Absolutely. And when you talk about that milestone, I think in the month of June itself, we also did see a MRF which hit a milestone of 1 lakh. We had a Britannia which also hit a milestone of, I think, 5,000 if I'm not mistaken. And now you do have a Maruti which actually hit a milestone of 10,000 in trade. And this is the first time ever. In fact, the stock ended with gains of around 3.5% in yesterday's session, a 52-week high of 10,036. And interestingly, it's crossed a market cap of almost 3 lakh crores in yesterday's session. If you see in terms of FY23 performance itself, or YTD 23 performance, the stock has seen gains of almost around 19%. One of the reasons why we saw this kind of a move in yesterday's session was on the back of the launch, that is the Invicto MPV. And this is going to be their flagship model as well. Now, the introductory price, as we know, is in that range of around 24 to 28.5 lakhs. And this becomes one of the costliest vehicles that have been launched by Maruti. Overall, yes, it is a rebranded version of the Toyota Innova Hycross. And what the company executive said yesterday is that they've already received around 6,200 odd bookings since mid-May. So that's a good number coming in just for the first 15 to 20 days. Interesting statement coming in from the managing director and the CEO as well at Suzuki was that the company is looking to double its turnover to around almost 1.68 lakh crores by FY31, and this is from the FY22 levels, and this is pretty much in line with parent Suzuki Motors' global growth strategy. So that's a strong statement that we've picked up as well. And if you see in terms of analyst recommendations, that's giving you an interesting story, because the 12-month potential target price is 10,320, which is showing you a marginal upside of around 3.3%. Now, whether we will see any upgrades coming in or what the earnings will actually give us in store from the first quarter onwards is something we need to wait and see, because 38 still have a bike on the stock. So there could be a potential rating or a target price upside that could be coming in soon as well for the counter.
I was looking at the long-term chart on Maruti Suzuki as well, and it has taken about 5.5 years for Maruti Suzuki to come back past that 9,700 odd mark that it hit in 2017 and breach it and go past 10,000. So it's quite a landmark for them. Another counter that you want to watch out for is Bajaj Auto for multiple reasons. Yesterday, you saw the launch of the Triumph, and you saw Rajiv Bajaj make a statement on one interview where he said that if Royal Enfield is where the money is, then that's a bank that we have to rob. And so that was the intention behind the launch of the Triumph, because he's trying to compete with Royal Enfield, which is a leader in that space. But they're just about 2% away from that 5,000 mark.
Absolutely. And that's an interesting one to watch out for in today's session as well, because clearly, if you see Bajaj Auto, 4,900 odd is where the stock is trading at, just 2% away from the 5,000 mark, as Alex was mentioning. In fact, Morgan Stanley has an overweight on the counter, and they have a target price of 5,063. And what they are saying is, from a bull case scenario perspective, they're expecting Triumph launch to add almost 466 rupees per share, and that's on the SOTP basis. And if you talk about FY25 price to earnings, that is at around 17 times versus a 10-year median of around 18 times. And they still prefer Bajaj Auto in the two-wheeler space. If you talk about, a consensus, around 25 brokerages have a buy rating on the counter, 17 have a sell, and 4 have a hold. Though interesting is the 12-month target price is 4,665, which is a downside of around 4.5%. So lots that could be brewing here as well. Capacity addition is something that is on the cards as well with regards to Bajaj Auto. Now, how Triumph competes with a Harley, as well as how both of them together then compete with a Royal Enfield, is something we need to wait and watch, because clearly, what comes across to me over here, Alex, is the kind of loss or hit that a Eicher will take, whether a Hero and a Bajaj Auto will be able to capitalize and gain that much is a question that we need to wait and watch. But clearly, Eicher is going to be something which will start seeing minimalistic impact, but yes, they will.
As somebody that has tracked Bajaj Auto in the past, I would also watch the exports very closely, because that has been a pain point for the counter. And also from the margins perspective, gone are the days when you saw 22, 21% EBITDA margins. And that three-wheeler mix in the overall volume is also something that you want to watch out for. For now, though, let's turn to the steel space, where Tata Steel has an update from its AGM. And Rishi is joining in to talk about what could be a very strategic shift from the perspective of the volume mix for Tata Steel. What do you have for us, Rishi?
So Tata Steel had its 116th AGM yesterday, and we all know Tata Steel for its focus on its domestic market. And that was only reiterated in the AGM after the company expects the domestic steel demand to keep pace with the GDP growth. But the crucial takeaway would be in how it's planning to change its product mix. So with an increasing focus on long products as well as value-added products. So firstly, coming to the crude steel production, which it has given a guidance for 40 million tons of capacity by 2025 from the current 21 million tons in 2023. Now, of this, long products is expected to more than double from the current 5 million tons to 13 million tons by 2030. The company said that it is planning to attain leadership in the long steel space, and for this, it acquired the Neelachal Ispat Nigam in November last year, and which will reach a capacity of 1 million tons in the current fiscal year. And this is part of the Kalingar ecosystem, so it is also expected to benefit from the synergies. Tata Steel has also signed an MOU with the Punjab government for a 0.75 million ton electric arc furnace in Ludhiana, and this is expected to be operational within the next 2 years. Now, coming to value-added products or its downstream segment, it plans to more than triple its capacity from the current 2 million tons to 7 million tons by 2030. And of this, 4 million tons is expected to come from steel tubes. Now, this improved focus on value-added products is also expected to improve its profitability because these products have a much higher realization per ton if you look at it. And as part of this plan, it plans to double its ductile pipe capacity in the current fiscal and tin plate capacity by FY25. Now, coming to its upstream expansion plans, is also planning to expand its iron ore capacities from the current 36 million tons to 60 million tons. Now, other small highlights would be that, firstly, its focus with respect to Netherlands and the UK is on full utilization of the plants and also to increase their financial efficiency. It plans to have net zero emissions by 2025. And last but not the least, it secured full insurance coverage for its pension liabilities, which means that its pension payouts has been guaranteed by its insurer, and this guarantee has come to Tata Steel at no extra cost. So overall, if we look at, I would like to reiterate that the key would be to look at how the company's product mix is going to improve given that it has given this guidance.
Right, and with this as well, it's going to be interesting to see how the stock moves, because on a YTD basis, if you see, the stock's really not done much. It's seen a degrowth of around 5.5%. That's the loss that we've seen, though the last 1 year has been pretty good with moves of almost around 30-31% coming in there. So watch out for Tata Steel pretty closely. And thank you, Rishi, for getting us the details as well. So that's with regards to Tata Steel. But apart from a Tata Steel, a lot of other counters, Alex, that will be in focus on the back of the quarterly updates that we've been tracking over the last couple of sessions now. One of the companies from the FMCG pack that has come up is Marico. Mihika is joining us to get us more. Mihika, what is the update actually indicating, and what are brokerages making out of it?
Yeah, so Marico reported their FY24 quarter one business updates yesterday, and consequently Morgan Stanley, Dart Research and Prabhudas Lilladher have also posted their views on the same. The company observed steady urban demand during the quarter, but the rural demand remained unchanged. However, it does expect the rural demand to pick up given the favorable macro indicators and the company's penetrations across key franchisees. Macro's domestic business performance, which accounts for around 77% of their revenue, was affected significantly during the quarter because of trade destocking in Saffola edible oils. The restocking took place due to falling vegetable oil prices, which was a 30% year-on-year decline. Thus, the domestic business reported low single-digit volume growth, and Parachute coconut oil witnessed a slight degrowth in the volumes. On the other hand, though, the food segment continues to grow, and the premium personal care portfolio remained steady during the quarter. On the international front, the company delivered high single-digit constant growth this quarter. Consolidated revenue in the quarter declined in the low single digits on a year-on-year basis. The company expects their gross margin and operating profit to improve on a year-on-year basis and a sequential basis, which is led by the moderation in the raw material prices and a favorable portfolio mix. Dart Research assigned a buy rating to the stock, and they expect a 3% year-on-year decline in the revenue for the first quarter and an 80 basis point expansion in the EBITDA margins. Prabhudas Lilladher have an accumulate rating on the stock with a target price of rupees 550, and the brokerage expects the recovery in the rural markets to be delayed for another quarter. Morgan Stanley assigned an overweight rating to the stock with a target price of 611 rupees, which is a 13% upside to the previous closing day price. The management expects a volume pickup in the second quarter, and Morgan Stanley states that the risk to the upside could include changes in the faster than expected scale up in the foods and the digital brands, and the fall in copra prices, which could aid in margin improvement.
Right, so I think that's going to be a good growth story coming in there as well with regards to Marico. Thank you so much. And this will actually set the trend as well in terms of what happens and how the quarter is expected to look like, because rural demand, Alex, is going to be key from here on.
Absolutely. And that seemingly is the pressure point and the concern as well for Marico, where they're seeing a little bit of pressure on the volumes from the rural side. We'll see how that pans out. For now, let's turn to the banking space as well. Ujjivan Small Finance Bank has a quarterly update, and Varsha is here to tell you all about that. Varsha, what are you picking up?
Yeah, so business highlights from Ujjivan Small Finance Bank. So let's see. So the total deposits grew 44% year on year and 4% quarter on quarter. And this deposits was being driven by retail mix. Then we have CASA growth. So CASA growth was moderate. CASA rose 27% but was down 3% quarter on quarter. And advances were up 31% year on year and 5% quarter on quarter. While disbursement grew 22%, this was led by robust growth in micro banking and housing. Credit quality improved 20 basis points. Now, management had given a guidance in last quarter that in FY24 they expect balance sheet growth of around 20 to 30%. Though they see challenges, but do not expect NIMs to go below 9.3%.
Thanks so much.
And okay.
Yeah. No, you were saying?
Yeah. So actually, so there's this expectations that there will be growth in microfinance, micro lending, and MSME segment. So for Ujjivan, the micro banking forms almost 59% of their loan book. So let's see how this works for Ujjivan.
Interesting context, very important to bear in mind. Thank you so much, Varsha, for that. Let me very quickly take you through a few more stocks that you want to watch out for and trade on account of being in the news. Adani Wilmar has come up with a quarterly update. The volume has grown as much as 25% in the first quarter, and that's on a year-on-year basis. That was driven by strong demand in both food as well as the edible oil categories. The sale value declined, however, and that reflected the sharp drop in edible oil prices. The food and FMCG segment recorded a 20% growth in volume and 30% revenue growth, and that revenue crossed the 1,000 crore mark during the quarter. Edible oil business grew as much as 25%, but the value terms declined about 15%. Asian Paints is going to be in focus. Its unit has set up will set up a manufacturing facility in the UAE. That unit is going to be called Asian White, and it will manufacture, trade, and export white cement. Prestige Estates, its arm, has gotten into a joint venture with WS Industries, and that joint venture will ostensibly develop IT and IT-enabled services parks in a 6.5-acre property in Chennai. DCB Bank, the RBI has approved the Tata Asset Management's plan to acquire up to 7.5% stake through schemes of Tata Mutual Fund, and the approval is valid for a period of 1 year from the date of that letter. Bombay Dyeing, very quickly, it will likely or could sell its Worli land parcel for an amount of 5,000 crore rupees. Adani Green is mulling raising funds. BSE is also considering a share buyback, and Tata Power finally has bagged a 1,744 crore contract for a smart metering project in Raipur. We're talking about smart metering very often in the recent
Genius Power as well was the one that was in focus. So lots to watch out for. Thanks, Alex, for taking us through the list. Lots to watch out for in terms of stock-specific action. So though the anticipation is that you will see consolidation, there could be some bit of profit booking, but stock-specific action is something that we could be watching out for in today's session, specifically with the large cap names as well. Some somber moves in terms of broader markets that could be on the cards. That's all that we have on this session of Trade Talk. Lots more lined up on the other side. Please stay tuned to BQ Prime.